Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is James Corbett, publisher of the CorbettReport.com and editorial writer for the International Forecaster. He's speaking to us from Japan, where he has worked and lived since 2004. Welcome back to the show, James.
Well, thank you for having me back, Jim. Pleasure to talk to you.
And you'll be pleased to know that your Calgary Stampeders won their last game 60-1 over Hamilton. I think the
sounds like a good CFL game.
Yeah. Very one-sided. Although the league overall this year has been quite competitive, that was an anomaly. But still, it's the usual. The West is much better than the East. James, the Dow has set record highs. How are the Tokyo and Shanghai exchanges doing right now?
Well, Tokyo is an interesting position right now because the Nikkei stock average just closed over the psychologically important 20,000 mark, hitting 20,080, which one would think is sign for some optimism, but in fact, the market seemed to be treating it as an ill omen of sorts, especially because there has just been some recently released economic data showing that the April to June quarter actually saw a contraction in economic activity here in Japan. So any optimism from this upward momentum on the stock market has kind of gone out in recent days and weeks, and people are waiting for a type of contraction to come as a result of this. So although the momentum is upward, I think people are a bit nervous about where this is heading, especially given that economic contraction data that just came out from the Japanese government.
In other words, a lot of people confuse the economy with the stock markets. In this case, what the economy is doing and what the stock market is doing, two different things.
Well, of course, yes, that is something to keep in mind. People have been trained over a very long time to think that economic data, to think that the stock market and whether it's going up or down is a form of economic data, when, of course, it should theoretically be the opposite, that economic data should be driving markets. And although that doesn't always happen in this age of central bank-defined markets, there's still a ground base of reality here that people are working with. And so I think the smart investors, of course, always see that and know which way the wind is blowing. And in this particular case, things are not looking particularly good for the Japanese economy at this precise moment.
Are Japanese people exploring the possibility of acquiring a bomb shelter with North Korea continuing its ballistic missile tests?
Well, I have read that headline in the wake of this ICBM madness that's going on over here, and I'm sure that there are companies that do that and sell that, and I'm sure there are people who are buying, but I can personally attest in my day-to-day life here in Japan that no, this is not the hottest new trend, and not every family has a bomb shelter. Whatever kind of story it might make. Clearly this is not the average person. It does reflect an overall sense of concern, I think, about the situation, and obviously it's something that's topping the news every day here in Japan, but I don't think that the average person is quite ready to sell their home and buy a bomb and fallout bunker.
Well, there was also, I don't know if it was a myth, that when Japan brought in negative interest rates, people ran out and bought home safes.
Once again, I'm sure there was a spike in activity, but a spike on 0.001% of the economy is not going to add up to very much. So again, I can personally attest to the fact that I did visit some stores, having seen that headline specifically to look, and nobody, they weren't flying, no safes weren't flying off the shelf, and there was no shortages or problems with stocking the safes or anything like that. There was no sign whatsoever of any of that kind of madness. So again, it's those types of stories that get reported, and maybe there is some spike in activity, but again, it doesn't filter down to the average day-to-day level.
Well, perhaps if you sold one bomb shelter a year, selling 10 would be a huge spike in business.
Exactly. I think that's exactly the case.
With China's economic growth reported again in the last quarter at 6.9%, just as they predicted it will be, is China's economy really doing that well? Because the price of copper really has gone up quite a bit, and that's usually a good indicator of strong industrial growth.
Yes, there are some good indicators, but I think there are more fundamental structural instability concerns when it comes to China and its debt bubble. And of course, we've heard this quite a lot over the last several years, and I think that's because it is one of those things that is undeniably true, that the Chinese economic activity of the last several years has been basically debt-fueled. And the only question is if and when the piper is going to be paid and how that's going to come about. So, as always, there are voices warning about this. And I think there are reasons for particular concern at this moment, because we have seen this crackdown by Beijing in recent months on a number of groups, the Anbang Insurance Group, Dalian Wanda Group, Fosun Group, HNA Group, which suggests that Beijing, at any rate, is concerned about some of these types of conglomerations, these family-run conglomerates that are have a growing amount of sway over the economy. So there's that kind of instability, and there's other things like the Moody's downgrade that we saw recently that can throw a spanner in the works. So there's a lot of things up in the air, and when you combine that with shadow banking problems and a lot of concerns on the geopolitical scale as well, when you throw in the North Korean situation and how the U.S. sanctions or whatever might come of that might come and affect China. That's always going to be those kinds of concerns that could overturn any of the investment infrastructure growth that we've seen as a result of this growing One Belt, One Road policy that Beijing is working on.
Is it fair for President Trump to demand China do something about North Korea at the same time he wants to put sanctions on things like China's steel exports?
Yes. Well, I think we have to see this as kind of a bargaining strategy in a couple of different fronts. I mean, first of all, of course, there's the North Korea situation, but then when you throw China into that, then of course it does become a trade issue. And it is a question to what extent the United States is interested and willing to sacrifice its relationship with one of its strongest trading partners in the pursuit of a geopolitical goal, or if there is some sort of greater strategy behind this in an economic sense. China, for its part, I think, is particularly worried about this talk at this particular moment because the Communist Party of China is heading towards one of its leadership reshuffles. It's scheduled for later this year. There's going to be a Congress. It's held every 5 years, and it's being held later this year. So there are some shakeups that are potentially coming in the Communist Chinese Party, and this big question mark about the question of the U.S. Trading relationship, obviously one of the backbones of the Chinese economy, is hanging over that. So I think China doesn't want to rock the boat at this particular moment, and they're quite concerned about this. So I think the U.S. might have an upper hand in that particular regard. But again, the question is, to what extent does the U.S. want to cut off its nose to spite its face when it comes to the trading relationship with China?
And can China really influence a dictator who doesn't seem to care what people think?
I think the idea that China is a string puller or a puppeteer of the North Korean government is going too far, but I think they do have demonstrably some influence over, or some say over what could happen in North Korea, specifically on the economic front, where obviously the Chinese trading relationship with North Korea is absolutely essential to the North Korean government's viability and its ability to export coal and other minerals to China in exchange for currency that it can use to actually secure things in the international markets. I mean, that's exceptionally important to North Korea overall. So I think China does have a card or two to play in this deck. It's not that they're powerless. But as you say, I don't think it's that they're necessarily pulling the strings of Kim Jong-un or anything of that sort. So I don't think it's irrational to think that some pressure could be brought to bear on Beijing to try to rein in what Pyongyang is doing. but it might be a bit wishful thinking to think that it's a simple A to B relationship rather than an A to Z relationship.
Of course, China, I'm sure, wouldn't want the U.S. military bashing around in North Korea next to its border.
Well, that's obviously one of the concerns. I think this is why China is interested in maintaining something of the status quo right now, precisely because they do not want the U.S. military directly on their doorstep, which was what would conceivably happen in the event of the collapse of the North Korean government. And, of course, they don't want millions of economic refugees spilling across North Korean borders into China in the event of a governmental collapse there. So I think China is highly motivated to make sure that that doesn't happen. But it is, again, it's a question of what they can actually accomplish just in terms of their economic relationship with North Korea and whether that's enough to really prevent Kim Jong-un from pursuing this nuclear policy.
Would China be scared to invade North Korea itself because North Korea could have an atomic reaction to it?
I suppose that is a possibility. I've never really heard it put that way because I don't think the idea of a Chinese invasion is really on any planning table. I don't think China would be interested in that. I don't think they'd do that. And of course, China is one of the signatories to the Korean armistice itself, so they are on the side of North Korea in every conceivable way, militarily and economically. So I just couldn't imagine that China is preparing to invade, although I suppose if they thought that the North Korean situation could be handled by a Chinese takeover of North Korea, perhaps it's on some military planner's agenda. But at that point, as you say, I think the question of the North Korean arsenal being wheeled around on China is certainly a viable one. They can hit South Korea and they can hit China just as easily. So I think that would be something to take into account in that kind of scenario.
We'll have more with James Corbett right after this.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with James Corbett. James, to the best of your knowledge, are India and China still snapping up every spare scrap of gold they can find?
I haven't seen the latest stats, so I can't tell you who's winning that particular neck-and-neck race. But I know for the last several years, it's always been a question of who will be the biggest gold importer this year. Will it be China or India? And it's generally one of those two. I don't think there's been any sort of dramatic change in those trends. So I would imagine it's business as usual in that sense. And of course, one of the interesting things that we've seen in recent years is the Chinese government, the People's Bank of China specifically, having taken to updating the official gold reserve holdings of China in recent years, and we've seen this the sort of mythical number of gold reserves that China claimed to have that had been maintained for several years, even though we know that China has been importing gold. Well, suddenly they've started adjusting that and showing that the gold reserves are growing. I don't think that means we can still trust these official gold reserve holdings, but I think it is a sign that Beijing obviously is importing a lot of gold and is telegraphing to the world that they're importing more gold. And I think we specifically saw that in the run-up to the inclusion of the yuan in the IMF special drawing rights basket. I think that was one way of them showing that there is some stability, just the sort of hope and change of the debt-fueled bubble that's occurred there over the last several years.
Now we have gold, the oldest currency in the world, still playing a big role in world finances. What about cyber currencies? Are they hot in Asia?
They certainly are, and that was, of course, one of the reasons that the Chinese government cracked down on Bitcoin exchanges very dramatically here in the last couple of years. And famously, I think earlier this year it was that several of the largest Bitcoin exchanges in China, which are some of the largest Bitcoin exchanges in the world, because the Chinese Bitcoin market is quite large, shut down for a period of time to come into compliance with new rules that Beijing was setting out. So I think Bitcoin has been seen as one of the outlets that people who are looking to circumvent the Beijing capital controls have been using. I don't think it's one of the major ones, but at any rate, it was one of the options that seemed to be on the table until this crackdown started, and now we've seen more government regulation of that. So, but China and Japan, of course, now with Japan having basically officially regulated Bitcoin into an officially usable currency, there has been a lot of demand from East Asia for Bitcoin in particular, and the cryptocurrency markets in general, which have seen a remarkable rise over the last few years, going from a couple of $1 billion market cap overall for cryptocurrencies upwards of $50 billion now. So there's been a remarkable growth, and a lot of that has come from the Asian markets.
Are people concerned it's used to get money out of the country illegally?
Well, the Chinese government is certainly concerned about that, which, as I say, is part of the reason that they brought in stringent new controls and regulations for the Bitcoin exchanges in China. And I think that's also really part of the Japanese government's move to make Bitcoin an official currency that can be used in transactions, is to bring it within the purview of the Japanese regulatory authorities, so that, again, all exchanges will be monitored, and they'll have to report and know your customer and all of that, so that basically it will become just another form of any type of currency that's currently usable, in order to make sure that that kind of unregulated activity, shall we say, doesn't occur.
We'll have more with James Corbett right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're talking with James Corbett. James, the Bank of India wants to cut its trend-setting rate by 25 basis points to 6%. They feel inflation is not running at the rate they would like. Why are central bankers obsessed with raising inflation? Isn't it good sometimes that prices come down?
It is sometimes, but I think the overall idea is that a growing economy will require a growing monetary base to work from. And obviously you don't want to expand that monetary base too quickly and get the runaway inflation, but you don't want to expand too slowly or contract the money supply and ultimately stifle the economy. So there is this Goldilocks 2% that a lot of central banks target, and I mean, there's certainly room for debate about whether that's an ideal. But again, in a growing economy, you would want some degree of inflation just to ensure that there is room for the economy to expand. And that, of course, that economic expansion could be population, because a growing population will require a growing economy. It could also just be a modernizing and developing economy reaching its potential, which I think the Indian government would like to think India is coming into, and certainly has been the promise for a very long time, but famously stifled by a lot of government regulation and red tape. At any rate, this is why central banks like to target a inflation rate, usually somewhere in the 2% range, and I think that's what India is attempting to do with this latest cut.
I was going to ask, how close is India to surpassing China's economy?
That's a very good question. I don't have the figures in front of me, so I don't know. I don't think that at the current rate they're on the trajectory to pass the Chinese economy, just given the current momentums. or at least not in the conceivable future. But obviously that changes based on a million different factors, all of which could intervene in the meantime. Certainly, I think the idea is that India is not quite living up to its potential as the world's largest democracy and somewhere that has been attempting to get investment in various capacities and build up its IT sector and other things over the past few decades. It certainly has never really lived up to its potential at this point, and it's always put in that category of this is going to be the next big emerging market, and just like what China was for the last couple of decades, India will be for the next couple. But again, that's all very theoretical still at this point, and I think there's a long way to go before we start seeing India really starting to even think about overtaking the Chinese economy.
The war on cash, I read somewhere, some are talking about, for example, putting a chip on a $100 bill that would have that bill expire at some point. Have you heard anything like that? Because countries really want to get rid of cash so they can control every aspect of your life.
I haven't heard that proposal in particular, although I suppose it wouldn't necessarily surprise me. I mean, there are things that can be done with seigniorage and other things that have been attempted in the past, even without that kind of technology. You've had bills that are stamped with a sort of expiry date, as it were, in the past, and that encourages the flow of money through the economy, etc. And there are economic reasons why you might want to do that, but in terms of the war on cash in particular, there certainly has been and is a concerted effort at this point to demonize cash and to basically move and transition the economies of many different places around the world into a cashless system. And there has been a large degree of progress on that in recent years, obviously with more and more countries around the world seeing a greater and greater share of overall transactions becoming electronic. And that's reaching, I think, what I would term worrying levels in some countries where more and more services are being phased out on a cash basis to the point where you can't use cash to do certain things. And that, I think, should be worrying to people who like some degree of economic freedom in what they're doing. But at any rate, it's certainly understandable why central banks and other central planners and social engineers would like nothing more than to be able to control absolutely every aspect of everyone's financial lives, including seeing exactly what everyone is doing at all times in the economy. That gives them a lot more information and insight as well as control over what's happening in the economy, and allows for things like negative interest rates and other things that are just mind-bending and unthinkable in any other capacity suddenly become thinkable because, well, you can't take your money out of the bank and hold it under your mattress because there's no money to take out. It's all electronic. That would be, I think, the ideal of the central planners.
And how has Japan's negative interest rates worked out?
Well, so far it hasn't filtered down to the commercial banking level in terms of, if you have a commercial banking account here, it's not that you have negative interest rates on that. It's still affecting the banks themselves, but it hasn't passed down to the consumer level at this point. So in terms of the banking sector, I think there's some pain that has been felt as a result of this. And for example, we've had certain banks that are leaving the market making function in terms of bonds and other things just because there's absolutely no money to be made at it anymore. But in terms of regular commercial banking for the average person, it hasn't affected them directly yet. I think at the point at which you see that negative interest rate, if that does indeed filter down to average savings accounts, you would see an even larger increase in the phenomenon that we already know is a large part of the Japanese economy. Lots of Japanese people have quite a substantial part of their savings in safes in their closet, hidden away in the form of cash. And that is a phenomenon in Japan, and I think that would even be more so a phenomenon if we did see that filtering down to the consumer level.
James, thank you so much for chatting with us.
Thank you for having me on. It's a pleasure to be here.
My guest has been James Corbett, publisher of thecorbettreport.com. He was speaking to us from Japan. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.